My name is Bob Rycroft, and I'm Managing Director of TDn2K.
And I'm Victor Fernandez, Executive Director of Insights and Knowledge. Today, Bob and I will be sharing the latest insights based on the TDn2K data for September and Q3 of 2016.
Victor, let's spend a couple minutes talking about what the BBI numbers tell us about the month of September. We saw the continuation of sales trends that we've seen in the past, with comp sales down 1.1% and traffic down 3.5%.
But when you look at where we ended up for the quarter, kind of similar. We're down 1% for same-store sales, down 3.4% for traffic, and those results would be the worst quarter we've had in over 5 years.
And that does seem to continue a trend that we've seen for quite some time. The high point was probably the end of 2014, 2015, when we were really enthusiastic going into the year. But comp sales have trailed down pretty consistently since then, and what's even more troubling is that the pace of the decline seems to be increasing a little bit. Not only are sales negative, and that's never a good thing, but you hate to see them coming down faster as time goes on.
Now, within that environment, which has been tough, there has been some bright spots. For example, quick service has been able so far this year to be successful and actually have some comp sales at the 2% range, which is really unheard of for our industry in the last few years when it comes to sustained growth at that level. So obviously they're positioned to compete better in that marketplace, and there's some reasons for that. But then conversely, when you look at segments like casual dining, that's where some of the trouble in the industry is right now. They're seeing negative growth and have been for several quarters now.
What's also interesting to note is that there's a difference in the breadth of the decline this year versus Q3 of 2015. So for example, Q3 of last year, about 70% of our BBI brands had positive comp sales growth, and that's now down to about 40% this year. On the traffic side, the numbers are a little bit even weaker than that. Last year, about 40% of the brands had traffic that was positive in Q3. This quarter, probably 4 out of 5 of the brands that we track had traffic declines for the quarter. So that's a significant decline and a big change from a year ago.
So changing gears and talking about the people side of the business, which is so important for restaurants, what we're seeing is job growth has started to slow down. Last year, second half of the year, we saw between 4 and 5% year-over-year job growth. Now we're seeing it slow down, and we're under 1% for the latest numbers we produced at People Report.
And there's no question that the labor market continues to be tight. We're seeing hourly and restaurant management turnover trends that are higher than they've been in the past 5 or 6 years. In hourly turnover, all segments are above 100%, and quick serve is actually above 150. In restaurant management, all segments are above 30%, and that's about a 10-point swing in a period of 5 or 6 years. So getting staffed, getting the right people on the floor, getting the right people in the kitchen is a huge concern for restaurants at the moment. Got to attract, screen, retain, and train employees if you want to succeed in today's marketplace.